Welcome to Profiletraders. This is Reza and you're listening to my market analysis for May the 25th. We are looking at a chart of ES here, which is the S&P E-mini futures. And prior to go further into the detail of the profile chart, I will bring a daily chart here to get a broader view of what is happening. So during the last report, I indicated a couple of things. I indicated that number one, we were forming a head and shoulder here. Shoulder, head, shoulder. The neckline for a breakdown was given to you at 2025. And I said unless 2025 breaks to the downside decisively, this whole consolidation did not look to be bearish at all, because the way we were coming down had very little drive in it. It was very undecided, very unorderly, and at the same time I pointed to the chart below, which was showing that during this whole process of coming down there was actually no capital at all exiting out of the market. So I said it's a matter of time that we are going to break out of this consolidation and then go challenge this flat top, which is definitely a problem because it's not a finished top with a big rejection. And sure enough, 2025 did hold, and from that level on we now have about 70 points of a parabolic push to the upside. By the way, if you all ever ask yourself what a valid break out of a consolidation looks like, this candle here, this one here, is exactly what you want to see. Price range expanding up, volume on the buy side backing it up with a very strong close outside the consolidation. So now it's very clear. I mean, it would be completely crazy and foolish on their side not to take this top and clear it once for all. So it is very clear, even after today's extraordinary strength. Why extraordinary? Because yesterday we opened with a gap up, a significant gap up. We closed at 2045 and then we opened at 2056 and a half, and this gap between the close of the day session previously and the yesterday open, this gap was never challenged. On the back of the gap they bought it like there was absolutely no more left on the table, a complete panic buying, which cleared the top of its consolidation and closed at the very top of the day. Then yesterday we closed at 2075, and then again today we opened with a gap up, and again the gap was not challenged. So there is no doubt or question that there is a phenomenal strength into this market. Now you want to call this strength folly, baloney, Federal Reserve indirectly buying the market through ETFs. You want to say that it's the work of QEs. Whoever is behind it, they are absolutely having this thing in control, in the palm of their hands. And it is very understandable. Money is being very hesitant coming into the market. The banks, the Goldman Sachs, the JP Morgans, every other crook bank out there is suffering, and it is absolutely necessary to create a situation that public money will come back again into the market. And the best thing to create demand for this market is to make it go up. And of course, at the same time, if you can destroy and put out of business the shorts, God bless America, why not? So it is now a question of, I believe, days before we are going to go challenge 2100. Once we do break that 2100, I believe this time they're gonna try to go past that level from a to a significant level. Probably we could be seeing 2150 to 2175, and then of course after that, if we don't stop, my ultimate upside objective is 2135. On the other hand, any given time tonight or tomorrow, we do break below 2086 at the very first, today's open will be challenged, where all these minus development single print A's will disappear, and then if they want to come and close the gap from yesterday's close to today's open, it could hit 2075 to 2073 even. And of course, if we pass 2073 to the downside, we will be dealing with 2066 and a half. So 2066 and a half, we're going to put a line on that. And if this doesn't contain the move, we're going to close and hit 2056 and a half. So these are all your support numbers: 86, 81 and a half, 75, 66 and a half. If you're interested on the buy side, try to buy it from one of these levels, which will provide a better rate of success than anywhere else in between. On the upside, clearly 2100, and then past 2100 we will see if we're gonna go visit all the prophets and God himself up there. It's to be seen, but it definitely looks like that's what the plans are, and that's where the market is heading. Now we're gonna look at the chart of crude. Also an extraordinary difficult market to trade, because it is extremely violent, extremely stubborn, and it only knows one direction, and that is to the upside. So now obviously, like a fly around you know what, $50 is going to be the magnet, and it is not going to do all that it can to bring price to it, just for the sake of seeing what kind of a reaction it will create. If we do clear 50 and there is no rejection, then be reminded that you are also in a very distinct channel, and the upper part of the channel will be hit anywhere between 51 to 51.30, and that level once reached, I believe it is going to be very, very, very difficult to break it. But then again, it's what I believe. Between what I believe and what can happen in this absolutely crazy, totally manic market, it's a different story. But when you always trade, you need to have a map of the territory so that you know what are the best levels of resistance, what are the best levels of support, so that you stay disciplined to react from those levels when price gets to them. So everything is indicating to here that once we do reach the upper part of the channel, which will also be very close to this 52, and remind yourself that from 52 the last time, the market literally collapsed. We collapsed when we reached 52 all the way down to 32. So now from 32 we are back again to 52. It will be a complete V-shaped recovery, and it will be extremely, extremely difficult to pass 52 or 51 and a half easily. But based on today's action, again, close at the very top of the day, very close to hit 50. I believe either tonight or tomorrow we're gonna hit it, and then it's gonna be very interesting to see the kind of reaction it will create once we do hit $50. In terms of support right now, clearly support number 1 is 49, support number 2 is 48.65, and if we do break 48.65, then there is a POC down there at 47 92, 93. And what has been quite amazing as well is that all of this has been happening while the US dollar has been rallying like there is no tomorrow. Usually a rally of the dollar to this strength is a negative for commodities. One thing for sure one thing for sure is that they have punished gold. They have punished gold tremendously on this rally of the dollar. They made it drop almost from 1300 to almost 1215. That's about 85 points drop. And on the opposite, crude, it's just destroying everything and anything on its side when it comes to coming down or on the short side. So I believe we are getting close where number one, price is becoming very attractive, so that new drilling is going to come into place. New supply will come into the market. It's going to get too expensive for people to abuse it, as opposite to what it was at $30 a barrel. And at the same time, there will be a lot of catch up to do with the rally of the dollar. So be very, very careful not to get trapped by the crooks that are acting like this thing is just the beginning of a new bull market that is going to go back up to $100. It's not the case. Every single market, in my opinion, not every single, but crude and ES and the majority of indexes are all showing footprint of an extremely aggressive and dangerous bubble. So like always, thank you for listening. This is Reza with Profiletraders. If you wish to join my trading room, learn the method, you can get all my courses 1 year to the trading room at a slashed price of $675. 30 days money back guarantee. I assure you, you will not get a deal like that anywhere else. Check my website, profiletraders.com. Thank you for listening. Happy Memorial Weekend, and to the next time.